If you bank with Lloyds, Halifax, or Bank of Scotland, you need to check your transaction history right now. Not for fraud, for something worse. On the morning of March 12, 2026, the banking system didn't just glitch, it mirrored. Thousands of people logged into their banking apps and saw accounts that weren't theirs. Complete strangers' names, their sort codes, their spending patterns, their salaries, national insurance numbers, benefit payments, six-figure business transfers, all visible to random people who just wanted to check their own balance. For 2 hours, the entire privacy infrastructure of UK banking collapsed, and the banks are hoping you forget it ever happened. This video is about what actually occurred during those 2 hours of chaos and the 3 red flags that prove your private financial data was handed to strangers. If you logged into your banking app on March 12th between 7:15 a.m. and 9:20 a.m., someone else might have seen everything, and you would have no way of knowing. Let's start with what actually happened, because the official explanation from Lloyds Banking Group was deliberately vague. They called it a technical issue affecting mobile and online banking services. That's corporate speak for, we absolutely are not going to tell you what went wrong. Here's what actually happened based on reports from users who were online during the glitch. When you logged into the Lloyds, Halifax, or Bank of Scotland app that morning, the system randomly assigned you to someone else's account profile. Not a fake account, not a test account, an actual customer's real account with their real data. You'd see their full legal name at the top of the screen, their account number and sort code, their transaction history going back weeks or months depending on your default view settings. If they'd received their salary recently, you'd see the exact amount and the employer's name. If they were receiving universal credit or other benefits, you'd see those payments. If they'd made large purchases or transfers, all of that was visible. And it went both ways. While you were looking at a stranger's account, someone else was potentially looking at yours. The glitch wasn't consistent. Some users reported seeing multiple different accounts every time they refreshed the app. Others got locked into one stranger's account and couldn't access their own data at all. Some people saw accounts with massive balances. Others saw accounts in serious overdraft. One user on Twitter reported seeing a business account with over £300,000 and detailed supplier payment information, including company names and invoice references. Another saw what appeared to be someone's divorce settlement being transferred in real time. These weren't just numbers, these were people's entire financial lives exposed to random strangers. Here's why this is catastrophic beyond just embarrassment. First, national insurance numbers. Multiple users reported seeing full national insurance numbers in transaction descriptions or account details. That's the UK equivalent of a social security number in the US. With someone's full name, date of birth, which can often be inferred from other transaction data, and their national insurance number, you have everything needed for identity theft. Add in their sort code and account number, and you can set up direct debits, apply for credit in their name, or access government services. Second, employer information and salary data. If you saw someone's salary deposit, you saw their employer's name and their exact gross pay. That information can be used for targeted phishing attacks. Scammers can now send emails pretending to be from that specific employer with information that makes the scam look legitimate. They know your salary range, so they can craft believable bonus offers or pension scheme changes. They know when you get paid, so they can time the attack perfectly. Third, spending patterns and personal behavior. Transaction history reveals where you shop, what you buy, who you send money to, and what your financial priorities are. If someone saw that you regularly transfer money to a specific person, they might infer a relationship. If they saw gambling or adult content subscriptions or regular payments to addiction services, that's deeply personal information that could be used for blackmail or social engineering attacks. The bank's response was to shut down the apps completely at 9:20 a.m. For the next 6 hours, millions of customers couldn't access their money at all. No mobile banking, no online banking. Physical branches were overwhelmed with people trying to verify their balances and confirm no unauthorized transactions had occurred.
The official statement from Lloyds Banking Group said they were aware of technical issues and working to resolve them. No mention of the data exposure, no mention of whose accounts were affected, no guidance on what customers should do to protect themselves. By 3 p.m. that same day, the apps were back online. Everything appeared normal. Your account showed your information. Your balance was correct. But here's the critical question nobody at Lloyds, Halifax, or Bank of Scotland will answer. What happened to the data that was viewed during those 2 hours of chaos? If someone screenshotted your account information, that screenshot still exists. If someone wrote down your national insurance number, they still have it. If someone saw your salary and employer, they didn't forget that information just because the glitch was fixed. The 3 red flags you need to watch for. First, phishing attempts that reference specific information. If you receive an email or text claiming to be from your employer, your bank, or HMRC that mentions specific transaction amounts or dates that align with your real account activity from early March, that's a red flag. It means someone who saw your data during the glitch is now using it against you. Second, unauthorized credit applications or identity verification attempts. Check your credit report immediately. Use Experian, Equifax, or TransUnion to pull your full credit file. Look for any hard inquiries or credit applications you didn't make, especially ones dated after March 12th. If someone obtained enough of your information during the glitch, they might try to open credit in your name.
Third, unusual contact from people claiming to know your financial situation. This is more subtle but equally dangerous. If someone contacts you on social media or via email claiming to be from a debt charity, financial advisor, or government service, and they reference specific details about your income or spending, that's a massive red flag. Legitimate organizations don't have access to your specific transaction data unless you've explicitly provided it to them. What you should do right now. First, change your banking passwords and enable two-factor authentication if you haven't already. The glitch exposed account data, but it didn't give people your login credentials. Changing your password ensures that even if someone has your account details, they can't log in as you. Second, set up transaction alerts for any amount. Most banking apps let you receive a notification every time money leaves your account. Enable this for every transaction, no matter how small. If someone tries to set up a fraudulent direct debit, you'll know immediately. Third, freeze your credit file. In the UK, you can't completely freeze your credit like in the US, but you can register with protective registration services through CIFIS or National Hunter. This adds a warning to your credit file that lenders must verify your identity extra carefully before approving credit. It costs about £20 for 2 years, and it's worth every penny if your data was exposed. Fourth, report the exposure to action fraud even if you haven't experienced fraud yet. This creates an official record that your data was compromised. If identity theft occurs later, you have documentation showing when and how your information was exposed. It strengthens your case for proving you weren't negligent with your data. The regulatory response has been embarrassingly weak. The Financial Conduct Authority said they were aware of the incident and monitoring the situation. The Information Commissioner's Office said they were making inquiries. Neither has announced any formal investigation or penalty. Lloyds Banking Group's stock price dropped 2% on March 12th and recovered completely within 3 days. There has been no executive accountability, no transparent incident report, and no direct communication to affected customers about what data was exposed and to whom. This isn't the first time UK banking systems have failed spectacularly on data privacy. In 2018, TSB's system migration disaster left customers locked out for weeks and exposed data to unauthorized access. In 2021, multiple banks experienced glitches that showed incorrect balances and transaction histories. But the March 2026 Lloyds incident is different because it wasn't just a system failure, it was a complete privacy catastrophe that handed intimate financial details to random strangers with no way to track who saw what. The banks will move on.
The news cycle will forget, but the data exposure is permanent. If someone screenshotted your account details during those 2 hours, that image exists forever. They can use it now, next month, or 2 years from now. You'll never know who saw your information or what they're planning to do with it. That's the reality Lloyds, Halifax, and Bank of Scotland created on March 12th and then tried to sweep under the rug with vague technical issue statements. Check your transaction history. Look for anything unusual in the days and weeks following March 12th. Enable every security feature your bank offers. Monitor your credit file obsessively. And if you see any of the 3 red flags, report it immediately. This glitch wasn't just an inconvenience, it was a mass data breach disguised as a technical problem, and you might be living with the consequences for years.